Good day, you're watching Businessworld Live. I'm Santos. Here are today's top stories. Industry stakeholders expect sugar prices to drop soon as imports are scheduled to arrive in November. The peso weakens to the 57 per dollar level yet again. Finance Chief Diokno believes the peso's depreciation could be a boon to the proposed budget, saying it would translate to higher revenues. With vehicle sales surging in August, the automotive industry says it's on track to achieve recovery this year. And the head of the World Health Organization says the end of the COVID-19 pandemic is now in sight as the number of deaths plunged to its lowest since March 2020. We begin our broadcast with industry stakeholders hoping that prices of sugar in the market will soon ease following the signing of 2 sugar orders. This includes the importation of 150,000 metric tons of refined sugar, which is expected to arrive in 2 months' time. Shaila Francisco with a story.
Additional sugar supply could come soon after President Bongbong Marcos signed Sugar Order Number 2, allowing the importation of 150,000 metric tons of sugar. Under the order, half of the volume will be allocated to consumers, while the rest will go to industrial users or manufacturers. The imported sugar should arrive on or before November 15. The Sugar Regulatory Administration said the import order aims to stabilize sugar supply in the country. Data from the Sugar Board shows that supply will remain tight from September to August next year amid high demand. This is why under Sugar Order Number 1, all local production until August next year will be allocated for domestic use.
Because we have a little tightness sa supply. So, local lang muna for the production until we see down the line kung how's the production doing, because we really don't know until all the mills are fully operational.
With the 2 sugar orders, the United Sugar Producers Federation or UNIFED is confident that prices of refined sugar can go as low as 70 to 75 pesos per kilo.
Pag malaman na yung mga nagtatago na mga sukal na may dararating na imported na refined, i-release nila yan eh. Kung hindi, maabutan sila ng murang sukal galing sa labas, malulugi sila.
Meanwhile, the Samahang Industriya ng Agrikultura or SINAG is confident that local supply of raw sugar will not be affected since only refined sugar will be imported. However, manufacturers said the allocated import volume for their sector may not be enough to sustain operations.
Marami ang makahati-hati sa total quota. So, siyempre lahat ng pagbibigyan. Pag pinagbigyan lahat, yung quota na mapupunta sa bawat isa, most likely, mas maliit. Okay? So, is it really enough for everybody? Maybe not.
The SRE says the import program serves as a stopgap measure while waiting for the full operation of sugar millers to resume. The agency said it will monitor if production increases to keep up with demand. Shaila Francisco, ER1 News.
Finance Secretary Diokno says the continuous weakness of the peso against the dollar could benefit the proposed 2023 national budget. In a Senate Finance Committee hearing on Wednesday, Diokno says the impact of the depreciation could be favorable to the spending plan as it would translate to higher revenues and a narrower fiscal gap. He notes that the net effect of a 1 peso depreciation is already a 7.6 billion peso reduction in the budget deficit. The peso weakened by 34 centavos on Wednesday, September 14, closing at 57.11 against the dollar. Year to date, the peso has depreciated by nearly 12% or about 6 pesos and 11 centavos versus the greenback.
Without saying that I favor the depreciation, the impact of the depreciation actually is favorable to the budget because a 1 peso depreciation would mean a higher revenue for the government. It will involve, for example, 10 billion additional revenues without any adjustment or with little adjustment on the disbursement side, and that's mainly on the debt servicing.
Diokno also said the economy has recovered from the COVID-19 pandemic, giving the Marcos administration room to pursue targeted subsidies. This as opposed to providing ayuda under Bayanihan 1 and 2, which the finance chief described as wasteful.
pandemic-related ayudas at this time is a waste of fund because
Very
we have
specific
already.
remark. It was a very specific.
Yeah, it's in the nature of the Bayanihan 1 and 2, no. But the targeted assistance, to say the four Ps, those who are affected by the increase in the price of oil, the drivers. I think we should continue those.
Corruption, not inflation, poses the biggest risk to growth, at least according to PricewaterhouseCoopers and the Management Association of the Philippines' latest survey among the country's CEOs. Let's find out why with Mary Jade Divinagracia, Vice Chairperson for Ease of Doing Business Committee of MAP. Good day, Mary Jade. Thank you for joining us.
Hi, good morning, Jess. Glad to be here.
Okay, again, corruption as a hindrance to recovery is nothing new. But what's outstanding about the survey is how it's twice of a concern compared to other factors such as inflation and rising oil prices. Why is that, and where are the CEOs coming from?
Okay, well, first, let me say that timing is very, very important here. No? Last year, when we asked the same question to the CEOs, the greatest concern then was vaccination rollout, as you know, because COVID-19 and continuous lockdowns were at that time hampering economic recovery. This year, we have addressed the health crisis, so we're back to tackling the old problems. And of course, the problem of corruption has been there for so long, right? But unfortunately, we have not made significant progress. In fact, as you know, our ranking in the corruption perception index, is 117 out of 180 countries. And we are the worst performing among the so-called ASEAN Big Six. Now, this is a very valid concern that the CEOs are raising, as corruption scares investors. No? It can complicate doing business in a country. Of course, it can lead to unfair competition, delay some of the business processes. And it will increase cost, of course, because of those delays. And overall, it can hurt business viability. Now, whether corruption is perceived or real, it is making the country unattractive to investors, both foreign and domestic, but of course more so to foreign. And of course, all things equal, if you can do business in a place where there's better transparency, more efficient processes, and greater accountability, why would you choose otherwise, right?
Definitely, like what you mentioned earlier, it's definitely a valid concern here. But question is, where does this put us then in terms of investment climate, especially in terms of attracting investments here as we try to eat a slice of the pie in a competition with our neighbors here, especially in Southeast Asia?
Yeah, so let me talk a little bit more about that. So the previous administration has done quite a number of things to attract investors. You know, the passage of CREATE, which lowered the corporate income tax. Of course, we tried to open the economy a little bit more through the amendments to the Public Service Act, the Retail Trade Liberalization, and the Foreign Investment Act. But we are still losing our competitiveness against our ASEAN neighbors. No? And because we are facing a lot of challenges, you know, the high cost of doing business, our high power cost, also in terms of availability of talent and the talent's aptitude for innovation, critical thinking, and business and digital skills. And of course, we also need to improve our quality of infrastructure and logistical services, including connectivity and digital infrastructure. We also need to invest more on research and development. And of course, you know, we talked about transparency, respect for the sanctity of contracts, and overall ease of doing business. It used to be that having a pool of young English-speaking workforce was enough, but not anymore, because our neighbors are also leveling up when it comes to that. So we need to address the other areas where we are falling behind.
Okay, you already mentioned there are a number of things, of course, that the government needs to put in place in order to bust corruption. But one thing we have to point out also, like what you mentioned earlier, the timing of the survey, this happened July to August this year, very much so at the start of the new administration. Were you able to gather at least some insight or a sense of how optimistic CEOs are in terms of the new administration's capability to actually stifle corruption?
Well, that's not really covered in the survey, but we'd like to note that while, the new administration has not really covered corruption in the SOLNA, but during the campaign period, then President candidate Marcos mentioned that, all government disbursements will be done in the proper channels, no, and following the law. So I think that sort of gives the investors and the business community a good starting point to also expect that the new administration will make good of that commitment.
But do you think the mere fact that the president did not mention a fight against corruption in his SONA in his previous speeches, do you think that in a way also sounded alarm bells here for management leaders?
I suppose there are a lot of other very, very urgent matters that he needed to tackle during the SONA, right? But of course, hearing the president talk about such an important concern would also give investors a bit more comfort, sana, no?
Okay, but again, I mean, corruption is a marriage between the government and the private sector, let's face it. I mean, the private firms have had their own fair share as to why corruption is the way it is now in the Philippines. So what can Philippine companies do better to address corruption as well?
Yeah, so thanks so much for that question, Jess. I think it's a very good question because the battle against corruption is such a massive task, no? And it will take collaboration between the private and the public sector. Of course, we know already, from the government side, what government needs to do is to pursue automation and digitalization of government services, right? To somehow reduce human intervention. And of course, the Philippine Business Hub is a good start, but we need to do a lot more. From the private sector, we also need to make that commitment to corporate integrity. We've talked about ESG a lot the past few weeks, the past few months, and that's part of the G in ESG. Other stakeholders also have an important role to play. We work with a lot of foreign investors, and they avoid investing in companies that engage in questionable practices. And we are also seeing that employees prefer to work with companies whose values align with theirs. And we're seeing that consumers are now more conscious about this also, as they are starting to vote with their wallets by supporting companies that are deemed to demonstrate good business practices. So we are slowly seeing the tide shift, but we need to do this together consistently to make an impact. Now, I don't want to sound naive. It's not easy, We've been tackling this for years and years. And usually, what we hear is if your competitor is doing it, one would say that you'll also be disadvantaged if you don't do the same. But that's what will separate a sustainable business from a short-lived one. And in fact, as we talk about this, I'm reminded of what our professor in business ethics said before, that the ethical issues of today will be the legal issues of tomorrow and will be the business issues the day after tomorrow. So I think this is something that the private sector would really need to work together with government, because both public and private sector need to tackle this gargantuan issue together.
Okay, it takes two to tango, as they say.
Exactly.
But earlier, when we started the program, I mean, we had reports here when it comes to sugar prices, of course, sugar imports, at the same time, the weakness of the peso. How much is a concern? How much of a concern are those matters when it comes to growth for companies and growth for the country in general, at least in your survey?
So based on the survey, those matters actually figured high as well as primary concerns that can further delay the recovery, and these are concerns that are continuing because of the pandemic, because of the geopolitical issues that we are all experiencing. So CEOs have also identified higher inflation and material costs, including supply chain constraints and labor constraints as the top concern that they continue to face. Higher inflation, of course, squeezes their margins and to some, it's threatening the viability of their business because they cannot easily pass on price increases to their customers who are likewise just recovering or even struggling still because of COVID. So I think that will continue to be to be a problem, and of course the peso depreciation as well. While it favors some industries, it also hurts others.
But do you see that figuring higher in your next surveys as a primary concern here for CEOs? And do you see that delaying further the recovery outlook, considering that in your survey, most of the CEOs are projecting that we would at least recover in the next 2 years?
Yeah, so it depends what would be the sentiment of the CEOs next year and whether or not we've addressed some of these concerns that they have raised this year. Hopefully we have. And the global economy would have improved by then as well, no? So that the CEOs can actually focus on other things like people development and improving customer experience.
Okay, thank you very much for your time today. Mayor Jade Divinagracia, Vice Chair for Ease of Doing Business Committee over at the Management Association of the Philippines.
Thank you so much, Chair.
Now let's pause for a quick break, but coming right up after that. The National Grid Corporation is now working with the Energy Department to ensure enough power supply. More of that and other stories when Business World Live returns. Stay with us. Watching Business World Live here in One News, I'm Jess De Los Santos. The National Grid Corporation of the Philippines is now in talks with the Energy Department to ensure sufficient power supply following the declaration of red and yellow alerts on the Luzon grid last Monday, September 12. This was confirmed by NGCP President Anthony Almeida in a Senate Energy Committee hearing, although he did not give further details about their talks with the DOE. Last Monday, the NGCP placed the Luzon grid under red and yellow alerts following forced outages at 7 power plants, while 3 power plants were operating at diminished capacity. The Energy Regulatory Commission said in a separate advisory that it will investigate the NGCP's actions in the wake of the loss of the power plant's output. The Bureau of Internal Revenues aims to have 100% of tax payments done online. The BIR says 98% of its taxpayers are already using digital platforms. The agency also says large and medium taxpayers are now mandated to file their returns and pay to the BIR electronically. The BIR says online filing makes it easier to automate letters of authority to examine tax records. The BIR stresses that the Bureau should not be the only one undergoing a digital transformation. Taxpayers should also keep up with technology in order for audits to be done properly. And with the drop in the number of global COVID-19 deaths, the World Health Organization says the end of the pandemic is now in sight. WHO reported that COVID deaths last week were the lowest since the pandemic broke out in March 2020. The WHO, however, warns the world against letting their guard down against the virus too early. The agency encourages nations to maintain their vigilance and keep up their efforts against COVID-19.
We have never been in a better position to end the pandemic. We're not there yet, but the end is in sight. A marathon runner does not stop when the finish line comes into view. She runs harder with all the energy she has left. So must we. We can see the finish line. We are in a winning position.
Even the digital economy is now affected by inflation, at least in the United States. Online inflation does seem to be making a comeback as prices of products on the internet are on the rise again. Bloomberg's Scarlett Fu gives us the details in this report.
Does the internet really offer better deals? Apparently not in the short term, because online prices in the U.S. rose 2.1% in August from July. That's according to the Adobe Digital Price Index, which tracks data based on visits to retail websites. Now, compared with a year ago, online prices rose 0.4% in August, marking a comeback for inflation from the drop seen in July, which had raised hopes that prices in the digital economy peaked. The August data now show otherwise. So what's driving the latest increase? Food. Online grocery prices jumped 14.1% from a year ago, a record gain, and the 31st straight month of advances. While prices in the largest category, electronics, fell 10% from last year. Along with groceries, Adobe says strong consumer demand will keep prices elevated for categories like pet products and other consumer staples. Contrast this with the overall economy, where government data show consumer prices are little changed on a month-to-month basis and up around 8% on an annual basis. Even after the pandemic, only about 15% of retail spending in the U.S. is done online.
Vehicle sales nearly doubled in August, and this is driven by strong demand for commercial vehicles. According to a report by the Chamber of Automotive Manufacturers of the Philippines and Truck Manufacturers Association, local vehicle sales surged by 90.5% to over 30,000 units in August. That's from the 15,800 units sold in the same month last year. Commercial vehicle sales more than doubled to over 23,000, while passenger car sales rose by 38% to 6,700 units. Campi says this shows that the recovery of the industry is on track, with sales performance reaching pre-pandemic levels. Maya Bank records 5 billion pesos in deposits 3 months after its public launch. This makes Maya Bank the fastest growing digital bank in the Philippines since it launched in April. Maya Bank also boasts of a customer base of over 650,000 as of end July. To encourage more Filipinos to experience what Maya Bank has to offer, the digital bank is offering a 6% interest rate on Maya savings up to 5 million pesos, among other promos. And those are the biggest stories on the economic and corporate front today. I'm Jess De Los Santos. We are One News, all sides, all the time. Don't go away. We'll give you the latest on the local bourse when Businessworld Live returns. Stay with us. And you're still watching Businessworld Live. I'm Jade, Delos Santos. Now, Wall Street investors bought the dip. That's after U.S. stocks tumbled the most in 2 years on the back of sizzling inflation at 8.31%. Further stoking fears of another hawkish move from the Fed. Now, bets are on for another 0.75% of a point hike. Some even wagering on a full point hike when the Fed meets next week. Futures so far, as you can see here, looking good for the Dow Jones and the S&P 500. Not the same though for the Nasdaq. Asia so far keeping in step with those gains, a sea of green as you can see right here. Japan, the topics in the Nikkei, both up by 0.1%. Korea likewise gaining 0.25%. Aussie stocks also up by 0.7%, as well as a host of Chinese stocks starting the day in the green. Let's see if the local bourse is keeping in track with those gains across the region. And yes, we are. At least you can see here the index is at 6,603, up by 0.3%. Let's try to check in on some of our gainers here. Yesterday, it was a sea of red here. Let me just refresh this one very quickly. You'd see here and our gainers here, at least outnumbering the losers so far. You have Mega World up 2.1%. A number of property players likewise in the green. Particularly, let me focus on this one. You have LT Group starting the day right here, as they noted that offshore gaming operators are starting to return in the country, further boosting, of course, their optimism for Eaton Properties. LT Group up by 1.25%. As like what I mentioned, other property players also keeping track of those gains. Ayala Land for one is up by 1.1%. The same cannot be said though for Robinson's Land, our worst performers so far at the start of the trading day, down by 3.1%. Globe likewise also in the green, up 1.2%. That's after the PSE did say that they are partnering with GCash, of course, to allow trading on the platform start come November. Now, lastly, let's have a quick check here on the peso. Starting the day strong after hitting the 57 level yet again yesterday. As you can see here, we're now at 56.978 to the greenback. And that wraps up our first look into the trading day, September 16, 2022. Join us again tomorrow at exactly 9:30 a.m. You can also catch us on Signal Play. Register for a free account now at www.signalplay.com and stream One News live anytime, anywhere. I'm Jade, Delos Santos. Stay safe, Philippines. We are One News, all sides, all the time.